back to our maiden Indianomics show in 2016, where we check out how banking will change in the year 2016. My guest now is KK Jain, an entrepreneur whose voteforcash.in provides loans through a mobile app. Mr. Jain, how do you appraise the creditworthiness of your borrower without even looking at him? How do you give loans through the mobile?
Sure. We are basically, if you understand, we are an online platform wherein we have three products catering to different requirements. One is in the retail loan space, which is voteforcash.in. The second one is unsecured business loans for small and medium enterprises called as SMEbank.in. And the third one is catering to K-12 education loans, which is voteforedu.in.
Okay, Mr. Jain.
So primarily
Mr. Jain,
all the three business models.
Yeah, Mr. Jain, first let us take only the personal products, the personal loan. Do you meet your customer face to face? How do you appraise his creditworthiness?
No, basically if you understand, in voteforcash.in we cater to a retail loans products, which is we call as need loans. We are not into the personal loan segment. So in what happens is that the user has to come online either through the website or use our mobile application, complete the one-time application process, and once the application is completed, they need to just give us their personal details and their professional details, upload certain KYC documents as any bank would ask, that is their PAN card, permanent and present address, all those details. Once the details are filled into the application form, we have a parallel algorithm which runs. So we basically ascertain their social worthiness rather than, more important, we don't focus on the credit worthiness. So what we try to ascertain from our algorithm is that how well you are connected across the world, how many people you know and what kind of quality people you know across the society.
Okay. So
we capture all those data points of any individual and then the score is mapped.
Okay, Mr. Jain, suppose the person does not have a Facebook account or a Twitter account. Then how do you map him?
Right. See, if you understand, globally India is the second largest market for Facebook and LinkedIn, third largest market. Having said that as well, we have customers who don't have Facebook and LinkedIn or Twitter accounts as well. That's the reason we have mobile application in place, wherein a user who uses any kind of a smartphone, either on Android or iOS platform, just need to download a free app, complete the application without having any Facebook or LinkedIn account, and then we capture the data points based on your own individual societal network. And once that is captured, the scoring is given, and then the lenders come on board and they facilitate the lending process to any borrower who is approved by our algorithm.
Okay, so you basically tie up with the bank. The bank gives the loan. You don't give?
No. We are basically a peer-to-peer lending platform or a marketplace wherein any individual or any institution can lend through our platform. So we don't tie up with the banks. We tie up with individual lenders as well as we tie up with NBFC companies or banks who can come on board and lend to our approved borrowers.
Okay.
So it's a hybrid lending platform.
So if a person does not have a Facebook or a Twitter account, you try and map people to whom he makes phone calls and thereby ascertain his social profile?
That's right. So say for example, if there is any user, based on your where you stay, all those things are any which was important, but how many people out there into the market. So if you are staying, say for example in Chandigarh, how many people you know, so we capture those quantitative analysis data points, and then what kind of people are these whom you know. So qualitatively we measure all those things as well. Plus there are certain data points like what is your age, whether you're married or not, how many years you have been staying in a particular location. All those things also come into the picture. Okay.
What is the NPA rate? How many of your loanees default?
Yeah. See, we are a startup, so we have spent close to 14 months since inception and had disbursed more than 12,000 loans in voteforcash.in. Approximately 19 crores plus has been disbursed. Our inception to till date NPA is less than 1.63%.
How do you assess the profile of your SME borrowers? I believe you call it SMEbank.in.
That's right. So in SMEbank.in, the social scoring remains the backbone of all the three platforms that we run. But in SMEbank.in, because we have to be more target and more customization is required, so we are a short-term unsecured business loan platform for any small and medium enterprise across the country. Without even having an ITR or balance sheet, they can use our platform to get instant business loans as quick as 15 minutes. wherein we have developed an algorithm called as what's your SME score, which typically captures your social profile, captures your manpower profile, and also captures your experience profile. So these are the 3 data points which we capture, and then we approve your membership or the membership is declined based on the pros and cons of these 3
but
data points.
But people could lie about the number of people who are working for them. The manpower number could be fictional, no?
Yeah, so we have various measures to validate that. So whatever you say, we don't take it just for the plain sake. So whatever the applicant is writing in the online application form, that is validated through various data points which are available across the World Wide Web. So basically we rely, rather than your documentation, we rely more on the information which is available in the World Wide Web or in the air. So those data which capture very scientifically, of course by taking your permission and approval, and once that data points match with your description, then the scoring is on a higher side. So if someone is trying to hide or someone is trying to lie the data points or information, 99.9% the application in the first step would be declined.
Alright, Mr. Jain, this sounds very interesting and probably the shape of things to come. Thank you very much for joining us on Indianomics.
Yeah.
Well, now having spoken to both AJAY Srinivasan and KK Jain, what are our key takeaways? One, the banking scene is definitely going to get crowded. From 46 players today, there could easily be 100. If you include the 11 payment banks, the Amazons, the Flipkarts and the Snapdeals who will also start lending, and if you include the peer-to-peer small lenders like KK Jain. 2, the number of big boys are going to increase. If Amazon starts giving loans, if Alibaba through Paytm starts giving loans, probably liaising with some other NBFCs, if RelGeo through SBI starts giving loans, we are going to see some really solid competition for the legacy banks. 3, what will this mean to the bank margins? What if the RelGeo SBI combine gives 7% on your payment bank deposits? What if Alibaba were to do the same with your Paytm bank deposits? Clearly, margins of even a tech-savvy expert player like HDFC Bank or ICICI Bank could come under threat. What to speak of the myriad PSU banks. 4th, who could be the winners? Very difficult to say at this point in time. It will be someone who still gives best service. Banking still is a personal service, and therefore anyone who can give you the touch and feel, the comfort and the trust will be the winner. So don't write off the legacy banks. Very difficult to say who will win. One thing is sure, we are living in very difficult times and very interesting times for the customer. That's it on this edition of Indianomics. Thanks for watching.